Hi guys, today we're going to discuss how do you trade forex. The first thing we're going to talk about is how do you make money trading forex. The objective of forex trading is to exchange one currency for another in the expectation that the price will change. So you're buying and selling currencies. But if I'm buying a pair, I'm expecting it to move or to increase in value for me to receive my profits. And if I'm selling a pair, I'm expecting it to decrease in value for me to receive my. So basically, it's you are expecting the value of the currency that you bought to increase compared to the one that you sold. So when you're looking at the forex market, right, the currencies, they are quoted in pairs. That means we have pairs like GBP, USD, or Euro Yen, or let's say Euro USD, and so forth. So GBP USD, right? I'm going to use GBP as an example. So GBP will be the base currency, and USD will be the quote currency on your pair. So the first currency would be the base currency, and the second currency will be the quote. So to go a little bit deeper on this is not something that you need to know. This is just something that you know if someone was to ask you, and to make your knowledge a little bit deeper, I guess. But the base currency is always valued at 1, and the quote currency is the value of the quote currency is the one that you see on this right hand side of your chart. This area, as you can see, this is the quote value, the quote currency value. So to go just a tiny little bit deeper, if I was to buy pound USD, right, then I am if I was to buy pound USD, so I'll be paying this price. Let's say USD is at 1.26, right? I'm paying 1.26 to get one of the base currency, right? Or let's say if I'm selling pound USD, I'm selling one of this pound, right? And then I receive the 1.26 of the USD. That's the basics of it. So if I'm buying pound USD, right? I'm buying pound, right? That means I'm paying the 1.26 to receive that one. If I'm selling the pair, then that means I'm selling pound. That means I'm selling the one to receive the 1.26. That's just the basics of it. This is not something that you need to know, but it's something that if someone was to ask you about it, you know. That's why we were saying if you bought the pair, you're expecting it to increase in value for you to receive your profits because you bought the base currency. And if you sell the pair, you're expecting it to decrease in value because you sold the base currency. All right. So the next thing we're going to talk about is the terms that are used when you buy or sell a currency or a pair. So when you hear people say long or short, basically long is the same way as a buy position. So when you say long position, that means you bought the pair, and the short is a short position is the same way as saying that I sold this pair, I'm shorting it, I'm not expecting to go higher, I'm expecting it to go lower. And long, I bought it, so I'm expecting price to go higher because I longed it. So let's write our notes. So let's say long position, same way as buy, and short position is the same as sell. And then if you have no position right now, this is called a flat or square. A flat would be when you have no position, right? And squaring up would be when you close a trade. So flat and square, people consider that as no position, and then when you're squaring up, that means you're closing a position. But these are terms that not most people use when they are talking about trading. Basically, people normally use short or long when they are describing their positions, or when they are trying to describe their ideas. I'm looking for a long setup, or I'm looking at a short setup. But flat or swearing, maybe you might use flat, but it's up to you. Then the next thing that you hear people talk about in the market is bid, ask, and spread. So in general, bid is lower than the asking price. So when you're bidding, right, this is the price at which your broker is willing to buy the best currency in exchange of the quote currency. This means the bid is the best available price at which you can sell to the market. You, the trader, can sell to the market. So let's write our notes. So bid is the best price available for you to sell to the market. That means, like we explained earlier, when you're expecting to sell, let's say you want to sell pound USD, that means bid is the best price that you can sell at the market for you to receive even more profits. So if you want to sell pound USD, then your broker will buy what you are selling at the bid price. And then the next thing is ask. So the ask is the price at which your broker will sell the base currency in exchange for the quote currency. This means that this is the best price at which you can buy from the market. So bid is the best price you can sell, and ask is the best price that you can buy from the market. So let's say ask is the best price available for you to buy from the market. All right, because you will see the bid and the ask terms a lot when you're trading forex, right? And then the next thing we're going to discuss is spread. So the difference between the bid and the ask is what's called spread. So spread is the difference between the bid and the ask price. That's your spread. So if you want to sell pound, right, let's say maybe you sell it at 1.34, right, and then you want to, and on the other hand, let's say you want to buy pound, right, you buy it at 1. Let's say 3458. So the difference between those two prices, right, that's your spread. And then for some brokers, they look at this spread as their fee. For some brokers, you can actually take that as their fee.